2. Property and casualty insurance license study exam. Distinct characteristics of insurance contracts. Insurance contracts are similar to most other legal contracts. However, they possess a number of unique legal characteristics. This unique combination of features reflects the distinctive nature of insurance contracts. Adhesion. Insurance policies are contracts of adhesion. The provisions are written by only one party to the contract, and the other party is required to adhere or stick like glue to them. In insurance, the insurer writes the entire contract, and the insured can either accept or reject it. Unlike a real estate contract where the buyer and seller negotiates terms, an insurance contract is written with no input from the insured. If there is any doubt regarding the wording of the contract of adhesion, the court will interpret the meaning in favor of the insured, and the insured has little or no input in the wording of the contract. Therefore, the insured cannot be held responsible for any ambiguous contract language. Adhesion. Policy written by the insurance company. Adhesion. Glue. Insured has no input. If ambiguous, court will take the side of the insured. Aleatory. Insured policies are aleatory contracts, meaning that the value received from the contract by each party is unequal. In insurance, the receipt of the unequal value rises because the insured performance under the contract dependent upon the uncertain event, the occurrence of the loss, which may not happen. The insured may pay premiums for many years and never receive any money from the insurance company if the loss does not occur. On the other hand, the insured may pay only a few relative small amounts of premium and receive thousands of dollars in return if a covered loss occurs shortly after policy goes into effect. For example, Tim pays an annual premium of $1,000 for his home insurance. His house burns down and is a total loss after the policy is enforced for 2 years. The insured will help pay much more of the loss of his home than 2000 Tim was paid in premiums, such as unequal receipts of the value of the defining feature of the aleatory contract. Aleatory, unequal value. Pay small premiums and have a large claim, or pay premiums for many years without a claim. Utmost good faith and reasonable expectations. Insurance is a contract of the utmost good faith. This means that each party is entitled to a reasonable expectation that the other party will not try to conceal pertinent information or otherwise act deceptively. Violation and the reasonable expectation can void the claim of the offending party under a contract. The utmost good faith, I promise, utmost good faith. The insured and the insured company has the right to expect honesty from each other. Unilateral insurance policy. Unilateral insurance policies are unilateral or one-sided contracts because only one party is legally bound to perform under the contract. The insurance company makes the legal promises to pay for a covered claim. The insurance can go and stop paying premiums and abandon the insurance contract at any time. The insurer does not have this flexibility as long as the insurer keeps the contract in force. By paying the premiums, the insured is required by law to pay for any covered loss that occurs. Unilateral. Insured may cancel the contract at any time. Insured may pay covered costs, covered losses, personal losses. Insurance policies such as auto and homeowners insurance and personal contracts that are contracts between the insurance company and the applicant and the insured, and the most cases there are non-transferable with the homeowner's policy. For example, the insured evaluates not only the condition of the property, but also the insured also has a risk. A different person, a family could represent a different risk, so the contract does not allow a change of the insured. Personal child contracts between the insured company and the insured cannot be changed to someone else. Conditional insurance policies are conditional. Conditional contracts because they require certain conditions to be fulfilled in order for the performance under the contract to be enforced. For example, the insured pay a premium for the policy to be enforced, or the contract may be require certain documents to be submitted to prove that the loss has occurred and certain conditions are not met. The contract may be voided and the claim may be not paid yet. Conditional. Insured must pay the premium of the coverage in the file in the claim if the loss occurs. Indemnity. Indemnity. Insurance policies are contracts of indemnity, meaning that the contract is intended to restore the insured to the financial state he or she enjoyed prior to the occurrence of a loss. No more, no less. The insurance is not entitled to profit from the payments made in excess of the amount of the loss. Insurance debt is the contract of indemnity which makes you whole, not rich. The payment puts you back to where you once were. The example, if you lost, was covered under two different policies. The insured could not collect twice for the same loss. The principle of restoring the insured in his or her principal loss financial state is known as the indemnification date. Indemnity, pay for the loss with no gain, no more, no less. Indemnity, pay for the loss with no gain, no more, no less. Representation, misrepresentation, and warranties. And representation is the statement that the applicant believes to be true. Statements made on the applicants by the insured are representations, and representations is the presentations that is actually false. For example, suppose Adam signs an insurance application and Adam L. Jones, even through his birth certificate, shows no middle name. He just adopted the L because he thinks it sounds good. Adams represents himself as Adam L. Jones, but the L is misrepresentation. Misrepresentation do not necessarily void insurance contracts. In order to void a contract, they must be material. Misrepresentation, that is the false information, must have a determining or a material factor in the insurer's decision to accept the risk. If the insurer would have changed or charged a higher premium or rejected the application for this, had the correct facts been known, the information is material. For example, Adam's harmless adoption of the middle initial does not affect his insurability, so it's not a material misrepresentation and would not void his policy. However, if Adam was applying for an auto insurance, it said that he never had his license suspended when he in fact his license had been suspended 6 months ago, and it is material misrepresentation which could void his coverage. Representation and misrepresentation, true or false. Representation believed to be true. Statements on the application are considered representations. Misrepresentation, information given that is not true but would not affect the insurance company's decision. Material misrepresentation, information given that is not true and does affect the insurer's decision. A warranty. A warranty is a statement that is guaranteed to be true, and it may be relied on by the other party. If a warranty is not kept, there is a breach of warranty that voids the contract. Typically, warranties are made by insurance companies. The warranty is made in the form of the promise. Applicants and insurance also makes warranties to the insurer. For example, a jewelry store owner makes a promise warranty to the insurer to have a burglar alarm system in the store. After a burglary, it is discovered that there was no alarm system. Since the insurer did not do what they said they were going to do in the contract, the insurer can deny the claim. Warranty promise always made by the insurance company. Breach of warranty may void the contract, may be made by the insured. Breach of warranty may void the contract. Concealment is the failure to disclose known fact. An insurer may be able to void the insurance contract if they can prove that the applicant of the insured intentionally concealed a material fact. A material fact is one that should have been voluntarily revealed even if it's not directly addressed at the time of the application. For example, John and Sherry Smith applying for auto insurance, and the entire family, they know that their son Joe has been to 2 speeding tickets in the last year, and did not mention it to the agent as they asked if their driving records were clear. In this example, John and Sherry are concealing material information, and any coverage could be voided in this situation. If they did not know about the speeding tickets, the concealment can be unintentional, and most likely the coverage could not be voided. Concealment, failure to disclose, concealing, or hiding information. If intentional, the information is material, important, coverage could be voided. If not intentional, coverage cannot be voided. Fraud is the intentional act designed to deceive or induce another party with something of value. Fraud involves intentional misrepresentation and concealment of material information. If someone intentionally lies to collect on false claim, it would be a matter of fraud. For example, a dishonest vehicle owner who was involved in an accident may take it up on an opportunity to fix previous damage to the automobile or receive treatments on his back unrelated to the accident. Intentional act to cheat another. Waiver of estoppel. A waiver is defined as an intentional and voluntarily giving up of a known right. For example, if the policy is issued to the insured a building without the company ever asking the age of the building, the insurance company has acted as if the age doesn't matter. The insurance company created a waiver. Estoppel means that once the right has been waived, it cannot be reinserted and used again. The insured, if the building of the insured company insured without asking the building's age burned down, and the insurance company tried to deny the claim by stating that they would not have insured the building if they had known the building was built in 1864, estoppel says that they must pay the claim because they created a waiver by not asking about the building's age. Waiver and estoppel, you have rights. Waiver, voluntarily giving up a right. Estoppel, once a waiver has been created, it cannot be changed. Jill is filling out the insurance application with information that she believes to be true. The information that she is providing is considered a misrepresentation, a material misrepresentation, a warranty, a representation. A guarantee that someone is true is a guarantee that something is true is a warranty. All right, that's unit 2. Contracts, property and casualty insurance. This KING-KAMBUF, 100 proof, bringing you nothing but the truth. KAMBUF. Amen.